many investors have bought property in Mexico with the idea of enjoying rental income until retirement? How many more would buy property with rental income in mind if paying taxes and taking care of legal matters were more simple? Taxes and what to do about them has stopped a lot of sales. We have it all going for us in Mexico. Beautiful climate, great locations on beaches, in the mountains. We have culture, history, great highways and airports, good activities, day and night. For the absentee owner, we have good professional management teams to meet, greet, and maintain properties. What we have also had is a big headache, and that's for the landlord. Paying Mexican taxes has always been a major hassle. The RFC, Federal Taxpayer Identification Number, causes headaches for the foreigner, starting with the FM3 document. This has been such a problem that people stop trying and just put their properties on the internet. They rent, they collect money, they pay no taxes. Owners are breaking the law, and Mexico is losing much needed tax income. Here is an example of what we've been living with. Option 1, which includes a 35% blind deduction on $10,000 of income, $3,500 is deducted, and the remainder of $6,500 is taxed at 35%. That means a $2,275 tax and $7,725 after-tax income. This is still an option today. For many years, it was the best way and the only way. And it can still be used today if it makes financial sense for an owner. In order to use option 1, an RFC, the Federal Taxpayer Identification Number, must be obtained. In order for the foreigner to obtain this, he or she must first obtain that FM3 with permission to rent the property. This can be a real challenge. In some cases, the Immigration Department has insisted that the foreigner stay in the country for the duration of the approval process, which can take days or weeks. All this for permission to pay tax on income from a property. And that's just the beginning. Once the FM3 is obtained, the RFC is relatively simple. But a monthly tax declaration must be filed, whether income is $10,000, $5,000, or just zero. It has to be filed every month without fail. And then an annual declaration must be filed on the monthly declarations. The taxpayer must be a physical person, not an LLC or other type of foreign ownership. Full receipts, full accountability are part of this equation. Costs, depending upon the accountant, can range from $150 to $500 a month. Obviously, the RFC requirement and compliance with option 1 can be challenging for the foreigner who has Mexican rental property but does not reside in the country. After several years of letters and consultations with Hacienda, it appears we helped them understand the problem. In February 2010, a new regulation was issued that provides for foreigners to pay taxes without obtaining the RFC document, nor is a special immigration status required. This is not a do-it-yourself issue. The foreigner cannot just go to Hacienda and pay. We have to provide a special receipt to tenants showing property tax number, we have the following elements. Tax is 25% of income. This is not a retention, but is a definite tax, so no annual declaration is required. EVA and the hospitality tax is collected by the owner from the tenant and paid to the authorities. It is a relief from hassle and from costs. In option 2, on $10,000 of income, $2,500 is paid and $7,500 goes into the taxpayer's pocket. In comparing, we have a difference of $225 between the two options. In order to sign up for option 2, we need a copy of the deed, latest tax receipt, the owner's passport, an information sheet, an authorization, and special power of attorney to represent the owner before the tax authorities. The settlement company prepares these documents. Basically, this represents a 25% flat tax with income nearly the same as option 1 and with much less hassle and headache. The really good news for U.S. taxpayers, if the property is owned in an individual name, all rental income and expenses are reported on Schedule E of the 1040 form. All allowable expenses are the same as for a U.S. property. Management fees, interest, property taxes, utilities, repairs, maintenance, association dues, insurance, depreciation, all are deductible, in addition to the tax paid in Mexico, and a carryover from the not-so-good year to the good year. The important point here, expenses are recognized in the United States. There is no double taxation as established in a NAFTA treaty between the U.S., Canada, and Mexico. After some years of serious investigation and research, the settlement company has arrived at the program that complies with the law, that is relatively simple and, most important, keeps the taxpayer fulfilling his or her obligations. This program can also provide an invaluable aid in helping investors make the decision to acquire a rental property in Mexico. We look forward to having the opportunity to work with you to do it right. Thank you.